Good morning, Happy New Year, and welcome to the first market update of 2022. Let's start by reviewing the market performance of 2021. On this chart here, we've got the 4-year performance in percentage terms of some key indices. Shown by the purple line, we've got the S&P 500 index. As you can see, it had another fantastic year, up 28% over the course of that 4 year. It was also not a bad year for the FTSE 100. That was up 14% over the year, shown by the pink line. However, it was a negative year for Hong Kong and China indices. On this chart here, shown by the green line, we've got the Hang Seng index, which is Hong Kong's main index. That was down 14% over the course of 2021, and it finished the year at just 86% of its starting value. What's interesting is to break this data down further and to have a look at how some different sectors performed. So on this chart here, we've got the sectoral breakdown of the S&P 500 index. So as you can see at the top, the best performing sectors were real estate, energy, closely followed by IT and financials. Now, energy, real estate and financials were hit hard in 2020 as the coronavirus first took hold, and they didn't really participate in that recovery rally that we saw in 2020. So in 2021, it appears that these three sectors have very much been playing catch up. Another key takeaway from this chart is that investors clearly had a preference for high-risk sectors in 2021. Those four at the top, that's energy, real estate, financials and IT, they're all very volatile and relatively high risk. Whereas if we look at the bottom of the chart, we've got utilities and consumer staples, and historically those have been relatively stable and less volatile. So we'll just have to see if investor preferences remain the same as we move into 2022. We're only 1 week in, but let's take a look at market performance for this year so far. What we've been seeing over the course of this week is a movement out of tech stocks and growth stocks into stocks that have historically offered great protection against inflation and rising interest rates, for example, oil stocks and banking stocks. The numbers on the screen now are showing you the performance from the start of the year up to close of play on the 6th of January. Now, the FTSE 100 is actually relatively overweight in oil stocks and banking stocks, and therefore it has performed well so far this year. It's up 0.9%. The S&P 500 is more growthy, it's more tech orientated, and that's actually down 1.5% so far this year. The Nasdaq Composite, on the other hand, goes even further. It's very growthy, it's very tech orientated. That's down 3.6% this year so far. And finally, Kantar has published some data on the UK grocery market, showing performance for the 12 weeks up until Boxing Day. Overall, supermarket sales were up 8% in comparison to the same period for 2019, and that simply shows that most of us have been spending a lot more in supermarkets because of the coronavirus and the fact that we can't go out to restaurants as much as we might have done in the past. If you have a look at this chart here, you can see that Tesco now has a market share of a massive 27.9%, and that represents an increase on the previous year. Ocado is also worth noting. Although its market share is small, it was the only supermarket on this list to grow its sales over the course of the previous year. Now, Tesco and Ocado are both very strong in the areas of online shopping and deliveries. They've both invested a huge amount in this area, and this data suggests that those investments are starting to pay off. Moving on to have a look at next week, we've got results out from Tesco, so we might get to hear a bit more about that increase in market share, and we'll also hear from Delta Airlines and how the airline is coping with the latest coronavirus variant. That's it from us. Enjoy the weekend, and we'll see you next Friday.